Hey guys, what's up? Alec back with the daily stock market, and check that out. The account is up $33,000 in the past 12 months. That's nearly a 60% gain, and year to date, up $23,000. So, yes, we have been absolutely killing the stock market. Now is the time to get involved and join. In this video, however, we're going to be talking about the best stocks under $10 per share, some swing trade price alerts, and much more. And make sure you stay to the end of the video because we're going to be talking about Dogecoin at 10 cents per coin, and we're going to be talking about if that's a good idea or not. It's up 79% in the past 12 months, by the way. And make sure you follow me on Instagram. Coming up on my 1,000th post on the daily stock market, 234,000 followers. And if you want to join my private trading group or my Discord, click on my link in my bio, scroll down. So the Discord is here to join the #1 stock market trading group on the internet. And if you want to even apply for some one-on-one coaching, if you're an absolute beginner, then here is the form to fill out some basic information so I could help you out the best way possible. Just make sure you message me on Instagram once you're done with that. Slap a big thumbs up on this video if you like when I talk about stocks that are under $10 per share, and strap your seatbelt in because we're going to jump right into this video. So the first stock that we have to talk about is Ford Motors at $10.83 per share. Okay, now I like them under $10 per share. Just in the last 2 weeks, we've seen them as low as $10.17. But we've seen a high in the last 3 months, just set in July, at $14.55 per share, which would be around a 30 to 40% gain on a swing trade on Ford Motors at the current price it's at. So it's very realistic that we can see Ford above $12, $13, and even as high as $14 per share once again in the next 12 months. Now, as far as lows, in the last 5 years, we haven't seen Ford go much lower than $10 per share. In 2023, it touched down to $10 per share, $9 per share. And then just recently in August, we see it touch that $10 support. So it seems like support around $10 per share on Ford Motors is pretty strong. Even around $12 per share, it was a little bit higher on the support back in 2022, 2023. But as far as a 5-year low, if we go all the way back to 2020, we saw them go as low as $4, $5 per share. But keep in mind that was during the pandemic, so you can't really count those times in. So all in all, if you are a Ford investor, I think it's a good time to start thinking about a position. Remember, this is a little bit more of a risky trade because overall Ford is a pretty inconsistent company. Even you can tell by a 5-year chart, only up 18% in the past 5 years. So there might be more swing trade opportunity more than anything. We also see that they're a dividend stock with a 7.15 dividend. So you are definitely getting paid on that yearly dividend for holding Ford. If you're a dividend investor, this could be an interesting stock as well. However, remember, I like it mostly in the short term for swing trade potential. Dividend investors, you could definitely take a little bit deeper of a look, which we're actually going to be doing in a second. So just stay tuned to the video. We see market cap 43.05 billion. And we also can see that there's a PE ratio of 11, implying that it is a good deal at the current price of $10 per share. So if we quickly pull up an income statement on Ford Motors, we can see that the total revenue has been pretty stagnant over the last 5 years. We have seen an 11% growth and a 15% growth in the last 2 years, year over year, which is actually a very good thing. So from 2021, it hasn't been horrible. You know, we've been seeing some double-digit growth, which we really want to see as investors. But remember, right now, the stock market mainly cares about net income. And just look how inconsistent this company is. We can see they even had a loss in 2020, negative 1.28 billion, with a big bounce back on their net income in 2021, 17 billion, and then followed by another loss of 2.15 billion in 2022. And then most recently in 2023, we've seen a 4.3 billion. And if we look at a quarterly chart, we can see that they're getting a little bit more under control in the last 4 quarters, their net income. However, we did see an off quarter in 2023 Q4, which is a big question mark. But overall, it's not the worst net income or total revenue statement that we've seen. And the quarterly charts are looking good on total revenue also. So I'd give them around a B minus or a C plus on their income statement. If we scroll down, the balance sheet is concerning. They'd get closer to like a D, maybe even a D minus. 82% assets to liabilities. Okay, but with a company that this big, like Ford Motors, balance sheet isn't as important. So I would weigh income statement with more importance than the balance sheet, specifically on Ford, because they're such a big company that we don't have to really worry about them going underwater or bankruptcy, anything like that, because they have the backings that they need to get the funding and a loyal customer base that's just going to keep buying their vehicles at the end of the day also. If we look at what analysts have to say about Ford Motors, the lowest analyst has a $9 share target price and the most bullish analyst has a $20 share price target. Now, on average, we see about a 13.67, which I was kind of implying that's a good place to be selling if you're buying at $10 per share or under $10 per share. I think $13, $14 is a great place to be selling, and that'll yield you a 26% upside even from the current price of $10.84 per share. So that'd be nice if we could see that in the next 12 months because that'll be a good swing trade, longer term swing trade, whatever you want to call it. Buying at $10.84 and selling at $13.64, which would be a 26% upside in 12 months, which is definitely beating the market, and people wish they could do that. So that'd be an amazing trade. We do that consistently. We're up, by the way, I think we went over in the beginning of the video, 60% in the last 12 months. Now, do take this with a grain of salt because we don't have many analysts reiterating any price targets recently. We do see a 4.3-star analyst, John Murphy from Bank of America Securities, with a $20 price target, just reiterated just 30 days ago. And if we scroll down, a lot of these analysts are, 1 star, 0 star. So definitely take this with a grain of salt. So Ford Motors overall is more of a wild card overall, especially in analyst eyes. However, I do think there is some good room for upside to $13 per share in the next 12 months. And that's why they made this video. They'll even be more attractive under $10 per share. And if I can get them closer to $9 per share, $9.80, $9.75, $9.90, I'm going to personally be picking up that opportunity to pull a swing trade or even a longer term swing trade on Ford Motors. And that 7% dividend on Ford Motors definitely doesn't hurt at all. So moving on to our next stock is SoFi Technologies at $7.84 per share. They're down on the day, and it was a bullish day today, by the way. So to see it down, it could be a good time to be buying. If we scroll out, we could see in the last 3 months, however, they are up 23%. So that's a hefty amount. They are on the up and up, as you can see. The resistance are getting higher and higher, and the supports are also getting higher and higher. So higher highs and higher lows is always a good upside trajectory that we are seeing, a good pattern to be following. However, before this recent turn that we've seen from SoFi, which was before the summer came around, before July and closer in June and all year, we've seen this downward trajectory, about a 34% downward trajectory, as you can see, from January, the new year, all the way to mid-year. The first 6 months of the year was definitely downward, and it seems like SoFi is turning the corner, and they are on that upward trajectory. Okay, now I would like to get in closer to like $6 per share, or even at lows of $6.30 would be ideal. In the last 1 year, we've seen them high as $10 per share. So if we could sell even above $10, $9 per share, I think that'll be a great swing trade opportunity for SoFi. And I think SoFi Technologies also has potential for longer term investors as well. Now, yes, it is a little bit, riskier than some other long terms that I typically like to have in my portfolio. SoFi is a good one, under $10 per share, that if you want to have a little bit risk, or if you can afford a little bit more risk, then it might be worth looking into. with only a market cap of 8.3 billion. There's a long runway of growth ahead of them. PE ratio negative 35. Now we don't like to see those negative PE ratios. We want to see positive earnings. But let's take a little bit deeper of a look into the balance sheet and income statement of SoFi. Okay, now starting out on a good note, we can see that the total revenue is exponentially growing every single year for SoFi. In the last 5 years, we've seen double-digit growth and more every single year. 64% growth, 27% growth, 74% growth after that, followed by a 59 and 34% growth. So their total revenue has been on a rocket ship, and if we look at the quarterly, we want to see that translating quarter over quarter as well. But more importantly, we want to see that growth in revenue translate over to net income. However, we haven't been seeing that, and they've been consistently unprofitable year after year. If we look at the last 5 years, we can see that their worst year was negative 483 million, and now they're doing negative 300 million. So we really don't like that. If we look at a quarterly chart, we can see it's just been very inconsistent. It's been a little bit better. The last 3 quarters have actually been profitable. So that's a good note, and it could be even why in the last 3 months they are up around 20%. So in all hopes that SoFi stays profitable at this point, that's going to be a very, very important thing. So overall, total revenue gets an A plus maybe even. However, their net income it fails. This is a very risky company just looking at the net income. If we look at the last 3 quarters, it's looking pretty good. However, the 88 million in net income was their best quarter, and then they lost after that, 17 million. So it's not getting better and better like we want to see. It's a huge profitable net income numbers, making it extremely risky at this time. If we scroll down, we can also see that they get probably around a D or even an F on their balance sheet, just because this is a company that could still face bankruptcies. They're not like Ford Motors where they've built their brand over the last 100 years. If their balance sheet's getting up to 80% debt to asset ratio, that's a huge red flag and a concerning thing for long-term investors. So until we see them profitably quarter after quarter posting a net income, a profitable net income, they're too risky to hold for long-term for a big bag at least, and also until they get their balance sheet under control and minimize those liabilities and grow those assets. They're not looking like the best long-term hold there either. So overall, yes, they are looking extremely risky, but if you can get in, $6 per share, $5 per share, $4 per share, I think there's a lot of upside opportunity there. Even at $7 per share, I would personally like $6 more. I think that a 30% swing trade in the next 6 to 12 months is a realistic scenario. When you're dealing with stocks under $10 per share, there's always more risk inherently. So that is something very important to consider, that stocks under $10 per share are extremely risky. Now moving on to even more risk, we see Dogecoin at 10 cents per share. Now, needless to say, cryptocurrency is as risky as it gets, but there is possible swing trade potential here, and you can trade it on most brokerages in America like Robinhood, Webull, and many others as well. Coinbase, of course. We see the coin is down 12% in the last 3 months with a high of 14 cents per coin. And in the last 1 year, they're up 80%. They were as low as 6 cents per coin. So if you traded Dogecoin with me last year, you saw hundreds of percent growth all the way from their low to their very peak. We saw 262% gain, going as high as 19 cents per coin, 20 cents per coin. And that was just earlier this year. That was just 6 months ago. So they've been on the decline, big downward pattern so far. And at this point, it's almost like catching a falling knife. However, we see a lot of support around the 8 cents mark, the 6 cents mark. So that's ideally where I want to be buying most of my Dogecoin is 7 cents, 8 cents, 6 cents. But under 10 cents per coin, I think it's good to start dollar cost averaging for a swing trade very lightly. And then 9 cents, a little bit more, start buying a little bit more. And this is my personal strategy, by the way, not financial advice. And 8 cents, buy a little bit heavier. 7 cents, heavier than that. And then 6 cents is where I typically like to buy the heaviest for Dogecoin. And we've seen that work all 2022 and 2023 with lots of spikes and opportunities to sell along the way if you don't want to hold for long term. So make sure you're following my only other official Instagram account, The Daily Cryptocurrency, with 594 posts and 115,000 followers. If you're interested in more than just the stock market and you are interested in cryptocurrency, this is definitely the best place to be. Thank you guys so much for making it to the very end of the video. If you appreciate the content, slap a thumbs up. If you want to join my private trading group, click the link in the bio. And if you want to see some success stories, go to the highlight section of my Instagram, Success 2024. Read through some of those positive testimonials. I can't post them all, unfortunately, but these are some of the highlights in my group. 70% gain in the last week. Small accounts are welcome also. Thank you guys one last time, and make sure you are subscribed with post notifications on YouTube. I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.